Now, let's take a look at a risk event for the week starting Monday, the 2nd of October. Now, there are two events next week which I want to bring together to take a look at them both with a trade around the Aussie against the Kiwi dollar. First of all is on Tuesday, we've got the Reserve Bank of Australia coming out with interest rates. It's widely expected we'll see their lending rate remain, the base rate remain at 4.1%, which is where it's been now for 2 or 3 meetings. And this is the first meeting where we got the new chair of the board. But she's unlikely, I don't think, necessarily to push for any move. I think it's a question of wait and see, but it's all about the rhetoric. Later on, 24 hours later on, we get the Reserve Bank of New Zealand on its interest rate picture. And the official cash rate is expected to stay there at 5.5%. So why is this a risk event? Well, I think, as I say, it's all around the rhetoric, depending on the two. Let me take a look at the chart I want to follow up on. This is the Aussie against the Kiwi. Now, obviously, this is the sensible way of trading this. In the last week, we've seen a new lower low here, not seen since the 26th of May, for weakness for the Aussie against that slightly stronger Kiwi. Now, it has been trading in this band between 107.17 and 109.31. Now, my setup here is based on the fact that the rhetoric for the Reserve Bank of Australia could be somewhat more dovish than that for the New Zealand economy. We've seen some more data coming through in Australia to suggest that potentially there is a possible downside compared to what we've got in New Zealand. New Zealand's also suffering a little bit because of high interest rates, and rates are higher there. But I think if we are going into this news next week on a short position, your stop goes up here at around about just over the 108 level. We're currently trading at 107.42. So 108 is a good place to stop. The 107.17, I would suggest, is the level to watch out for if we do get some extra dovish rhetoric coming through from the Reserve Bank of Australia. And if you get a candle close below the 107.17, you're on to a price target down here at 105.60, which would pretty much be an unwind of this channel that we've got here, which would be interesting to watch if that indeed does come to pass. But I think for that to happen, you would have to get something a little bit more hawkish in terms of rhetoric from the Reserve Bank of New Zealand on the following day's trade on Wednesday. So it's a Tuesday, Wednesday risk event around the two interest rate decisions from the RBA and the RBNZ.